Well, I think the Fed has made it very clear that their goals are different to what they used to be. I mean, their primary goal is obviously targeting inflation and full employment, but they've thrown in this idea of targeting unemployment rates amongst some of the more minority groups in America, as you mentioned, the blacks and the Hispanics, and they're very proud. And we heard Jay Powell say that at the last press conference and proud and impressed by the ability of the labour market to deliver wage gains for the lower income groups and some of the more minority groups and to get lower unemployment rates amongst those groups. And that was the outcome that we saw before this pandemic in the labour market. And they changed their targets in August last year, their announcement of their new policy targets. So, yeah, I think they will wait. They've clearly stated that they want to try and achieve this. And the question is, can they wait? Will anything upset this apple cart? Because it's quite clear the labour market's going to tighten very quickly. This is very different. This is a shock we're coming out of, not a recession. The scarring that we had in the recession post-financial crisis is not going to be the issue today. The issue is, will inflation rear its ugly head and cause the Fed to have to change course? But at the moment, they seem pretty resolute on sticking the course, looser for longer, looser than they've ever been, and maintaining that liquidity as much as they can, and being very, very slow to withdraw it. And anything that upsets the apple cart, and the labour market is clearly a possible candidate, is a real issue, I think, for financial markets in the medium term, given the sort of valuation metrics that you have there. But for now, I think the Fed's been pretty clear, looser for longer, keep it as low as they can. They believe the labour market's behaving very differently from how it behaved in the 1970s or indeed even parts of the early 1980s. And that's going to be their mantra until proven otherwise. So, yeah, all eyes on the labour market, critical, all eyes on inflation. Is it transitory? All these kind of issues that might change the Fed's behaviour. But they've been pretty clear for now, I think.
Chris, I'm really worried. I'm really worried that us talking about this for 15 hours a week and every other business news programme talking about it for God knows how long is going to bore our viewers senseless. I think we're doing a pretty good job of talking about the same subject ad infinitum. There's got to be something else out there, something the market is not focusing on, not fixating on, not obsessing about as well. What is it, Chris? What else can we talk about that actually should be worrying the market or should be concerning the market in one way, shape or form, other than transitory inflation, the Fed and the labour market?
Well, there's a ton of stuff we should be thinking about and worrying about, no doubt about it. I mean, the fact that China seems to be sort of surreptitiously, slowly tightening things up, and liquidity, and you've got your second derivative credit impulse, that troubles one. You should think about that. I think the valuation levels in this global stock market, valuation is not a good market timing tool, but that's an issue. If you look at households' exposure to equities in the US, it's never been higher. It's surged above its peak from the TMT bubble. It's surged above its peak from late 1968. And basically, it's its highest ever. If you look at what's happening in terms of the free money out there, the behavior, the sort of financial instability risks, you know, there's now 10,000 digital currencies, I believe. So, you know, these kind of issues are really troubling and really concerning. But ultimately, they all lead back pretty much, I think, to what the Fed's been up to in its liquidity provision. And indeed, I say the other thing I should think about, I think is really important, and markets are deeply confused by, is why bond yields peaked out in March, and the 10-year yield, having reached 174, is now, you know, trading around high 140s. And that I think is a really key issue as well. So look, there's a ton of stuff, absolutely. You know, and I could keep going on, but that would certainly give you a flavour. I think there's a lot to think about.